Good morning, everyone. Welcome to another video brought to you by Total Control Traders. What a beautiful morning for bulls. Congrats for all those of you who swung bull positions. This market on NAS is looking amazing now. Not to mention SPX, of course. The whole market overall looking wonderful. Let's get into some details as to what the specifics are. Had you swung bulls yesterday, it took some guts and it paid off. Well, it's about to pay off depending on when you sell, but congrats regardless. Where are all my morning people at? Anyways, all right, let's get into it. NAS. Let's look at the 1 hour. Look at this crazy base on NAS, hey? 1 hour. So we were in last night's video. What I was talking about was potential of a retracement, and what bulls want to hold was the GP, which lines up. Actually, let's go 4 hours. What bulls wanted to hold was the GP, which lines up with this previous key support resistance. But bulls wanted to hold more. Instead of the GP, they decided to just hold the 0.382. And from here, we are seeing a nice bounce breaking over that key trend line that's been keeping us down since the beginning of the pullback, starting February 15th. It's already been almost a month, eh? So the pullback, I would still call it a correction instead of a consolidation. So with a correction, key trend line, we have finally broken over it, and right now we're just about to form a potential backtest. Let's look at the shorter time frame right now. So we've just made a lower low on the 30-minute, which is completely fine. Volume is... We're seeing a little bit of a decent bear volume coming in. But regardless, ideal to see a back test of this key trend line that's been keeping us down since February 15th. Now with this back test, and after this long base, watch out for dip buying. The message I sent out to our trading group this morning was make sure. Good morning, DG. Long time no see. I do apologize for missing yesterday's video. Phone died overnight, so alarm didn't go off. Anyways, let me know if you have any tickers you wanted to review. I believe you did have one, but EIX. Yeah. All right. So yeah, from here, what we're looking for is a back test of this key trend line. And then from there, a next leg up. NAS is ready to go. Now, the potential of rotation back into tech is somewhat likely now, because if you compare the charts between NAS and SPX, NAS has just formed a 4-hour reversal, higher high, potential higher low at the 0.382, and then next leg up into the target. What we're looking at now is the GP from the top of the move, February 15th, to the low of the pullback on March 5th. GP would bring us to the next key zone. The key zone that we've been seeing, this one was a complete breakover, support over here, support, and then nothing over here, a little bit of support, resistance, resistance. So we'd be looking at around the GP at 13,260. Now the switch has been flipped. The switch on NAS, that is. Then this switch on SPX is potentially flipping from bulls to bears. And the reason why I say that is, let's take a look at, I want to show you guys fast first before I show you guys SPX and the reason why I say that. So on fast, Oh, great. TradingView is not cooperating, does not want to keep my charts. That doesn't look right either. Anyways, we'll withdraw that. So on FAST, this is a banking 3 times leveraged ETF. Financial sector. Okay. Financial sector has had a run since January 29th, and the pullback on NAS began February 15th. So financial sector has just ran completely through the pullback on NAS and SPX. This is the major sector. If you didn't watch last night's video, make sure you go watch it. I covered what, spent some time deep diving into what the major difference between SPX and NAS are and what's the cause of that huge discrepancy. And the solution that I came up with was FAST, basically the financial sector. Financial sector is majority based off on SPX and 0 weighting on NAS. So with this, we on FAST needs a daily higher low. It's just been a complete run since January 29th. 4 hours, there's been a few higher lows, 1, 2, 3, but on the daily, we'll be looking for a higher low. Now, if you were to compare this chart, so what is this, January 29th? If you were to compare this chart to SPX, and this one is no longer in play, I'll clean up NAS chart after as well. January 29th, January 29th. So this shows the beginning of an SPX bounce, the last big pullback that we saw on SPX. And if you think about it, this SPX run could partially be due to the financial sector's run as well. Then from here, there's a big discrepancy of SPX making higher highs on the daily versus NAS still being down. So on the daily, on the 4 hours, even on the 4 hours on SPX, needs a higher low. And currently in the pre-market, we are seeing a little bit of rejection, just a little bit of rejection from this key trend line to break before the all-time highs. We can see previous rejection, broke over, no support found, another rejection, one more, and one more before the complete breakdown on SPX. Okay, so key trend or key zone to be broken. This one was the major key zone because we saw previous supports and resistances. Now we have broken over it. This one, next one up, is not as strong, but the 4 hours on SPX does need a higher low. So let's take a look at the RD on here. Okay, so the trend line can probably be drawn a little bit differently. Now remember, for trend lines, always try to use the most recent touch. Some of you might say it should be drawn here, but what I found from experience is as it forms another touch, use the most recent touch. And then you back test it to see on the previous touch whether if it still works. Yes, it still works as long as this line, this trend line, is not cutting through a real body. Now, in the sense that if it cuts through, let's say there's no green candle here. In the sense if it cuts through this bearish candle, it cuts through the real body of that, that's fine because technically it didn't close over it. But on the line chart, it must work. Okay, so if you look at this line chart, yeah, lower trend line doesn't work, but on the upper trend line is the one we're talking about. That works. All right. Actually, now that I'm kind of interested. Oh, okay. This is fine. Anyways, yeah, so let's look at the RD. Rejection from the key trend line. Then we broke over, stalled, back tested, and now we're breaking over. So great sign for SPX, even better sign for Nas. Hey, John. I don't think I've seen you on Morning Live before. Good morning, man. 500 can now make new highs. Yes, definitely. That is on the table without discussion. As NAS or SPX is definitely looking at all-time highs now. But the only problem is with SPX, the last time we saw a rejection was one-to-one extension from, I can't remember what this one was from. The leg 3, or no, leg 3 was from back here. From here, this clear higher low to the clear higher high before the rejection to the clear higher low. That was where the one-to-one extension rejections we saw was the last big pullback. Now this pullback, however, brings our target a little bit lower. Instead of 40.90, what we're looking at now, so easy fib extension, what you use, morning Rafaela, what you use, same idea, higher low, higher high, higher low. The target now is looking at 40.21. Pullback is a lot more stronger than ideal, which brings our target down a little bit. Now 40.21 would somewhat line up with a 4,000. So the only thing on SPX now that I have a little bit of concern for, there's no doubt that we're going to make higher highs. There's no doubt we're going to make new all-time highs, but there's not too much room. There is the potential of further running. Now this is going to be an extended run on SPX now. Actually, there's one more line I wanted to draw. So if we're to use the leg 3, leg 1, draw a fib extension using the leg 3. So this, nope, right here. This was 1, 2, and then 3, and this is 4. So what's happening right now, based on Elliott? Still morning, need my coffee. Based on Elliott's wave, 1, 2, 3, 4, 5. What's going to be happening now is we're looking at an extended run into leg 5. Okay, so if you were to draw a fib extension using the leg from the 2 to the 3 to the 4, it would line up with that 40.20 target. But the other thing is, if you were to use that to draw a fib extension, there is a potential, because of how this 40.20 target is so close to the previous high. Doesn't mean that there's no chance of rejection here. There is still a very high chance of rejection here, or at least a stall. If you're seeing a stall here, of course, a lot more ideal than a complete rejection. If you're seeing a stall here, you could be looking at an extended run into this target. The 1.272 bringing us to that 4,200 mark. So this is an ideal target for the bulls. But first, we're going to have to watch for a reaction at that 40.21. Where we can see, doesn't matter how you draw your fib extensions, all targets line up right around there before the next leg up into 4,200. All 3 targets line up as well. So 2 key targets that we're going to be watching going forward. But just a reminder, 4-hour does need a higher low on SPX. Megaphone thing and X wave in wave 5. X wave. What's an X wave in wave 5? Let's see. Maybe I would say it's more so in yeah, if you look on the 4 hours, it's actually very 8 hours? 8 hours, there we go. So the megaphone that formed and now we have broken bowl over, this megaphone is actually more so an ABC correction. I'm not too sure what X wave is. I'm gonna have to look it up after the video. But if you look on the 8 hours, it's very clear. Well, it depends how you do. Let's see. I would say this is A, B, C. So now, by all means, I am no Elliott wave expert, and my plan this weekend is actually to learn a lot more on Elliott's wave, because they can be very beneficial. So overall, I have a basic understanding of it, I would say, maybe intermediate, but just enough to notice the 1, 2, 3, 4, 5, and where the ABC is coming from. So with that being said, if we were to see an extended run into the leg 5, neither are you. The concern now is, remember how I said that the next consolidation, once the high has been found on SPX, now with this break over this megaphone, it's confirmed that the high has not been found yet. But once that high has been found, the ABC is the reason why I'm saying the next consolidation, not the correction, the consolidation is going to be a big and elongated one. Do I picture us breaking over this previous low? No, not really. Okay, so even if you were to, worst case scenario, always GP. I mean, nothing is guaranteed, but I do see the GP holding. Partially due to key zone, you can see, let's do this on the weekly. You can see rejection, multiple rejections on the lower zone as well, and then coming back to backtest to the lower zone, and then backtest in the zone, backtest higher zone. This is a major key zone before the pandemic crash, which lines up with the GP. So do I see us making a new lower low? There's all sorts of crazy theories out there that people were actually talking about new lower lows during this consolidation already. But personally, I don't really see that. The market is made to go up. I mean, the thing is, the run we've had since pandemic has been nothing but crazy. Nothing but crazy for bulls. The pullback has been nothing but crazy for bears as well. And in my personal opinion, I do think that we have ran a bit too far, too fast on the longer time frames without a key back test of this. All right, this chart's getting a bit too messy now. I have to clean it up after the video. Without a key back test of this key trend line from 2008. Okay, we can see support, rejection, multiple rejections, and then another rejection, and a key rejection before the pandemic pullback. This key trend line has not been back tested ever since we broke over. Flat or zigzag, except in case where the... No, it's I think it's something different. So what I'm seeing on SPX is more like an extended wave 5. No, I wouldn't be bearish soon. 4 hours on the SPX does need a higher low on SPX, but my personal game plan is to take advantage of NAS, because NAS has been the weakest, just for this bounce instead of focusing on SPX. But no, I wouldn't say bearish, just not so much all-in type of an environment anymore. The all-in environment, it's given me doubts on this pullback. So the market has given me doubts on this pullback, so I wouldn't be using all my capital for bull plays anymore. And we'll start looking at hedges, and as well as potentially reversing to the bears as we get to that next target of 40 or 4,000 zone, because I am still looking at a back test of this key trend line, 2008 trend line. All right, let's take a look at a few tickers. First one, Tesla. We gotta cover Tesla. Why is my chart so messy? Okay, yeah. All right, let's do daily. So on Tesla, we bounce from the GP, lower trend line touch. Cannot get any better than this hold. I mean, of course, it can be the 0.382, but this is the ideal. The Tesla provided us with the most ideal entry right around here. My entry wasn't right there because I was thinking we might not touch the lower trend line. So I entered around this lower key zone, but the bounce is a lot stronger than anticipated. So we're opening up higher today. We are opening right around that 700 mark. And looking at the market, this is a key resistance based on yesterday. There could be potentially a sell-off early market, as mentioned in our trading community. The thing to watch for is if there's going to be early dip buying. If there's early dip buying, that gives further confidence to the bulls. Now, if we were to zoom in and look at the closer time frames on Tesla, 0706 already. This trend line that was keeping us down before, we had an immediate back test, and now we're making potentially higher highs today. That's a lot of tickers, DG. Okay, let's try to move through them relatively quickly. The other top watch I'm going to have on my list today is PLTR. And PLTR, essentially, we lost this key trend line. We did backtest the lower end of the key zone. This was an amazing entry for all those of you who did catch it. Completely missed it. Wasn't on my top watch. I sort of lost faith in it for a little bit. But now we'll be looking at the follow through from these two biggest volume back-to-back bull volume candlesticks. I want to see follow through the play out of these two. So gonna be PLTR will be top watch going forward. The target, even if you were to, okay, this is no longer in play. Let's look at the weekly if it works. Okay, so on the weekly, considering those two biggest bull volume days back to back, I like to have my target a little bit, how do you call it, exaggerated, but those are ultimate and ideal targets that I usually draw. Know that there are targets within, resistances within, but generally over the long term they should work out as long as the market is participating or cooperating. So if you were to draw from the low to the high to this higher low, essentially on the weekly this is a higher low. What these two bull volume candlesticks are telling me is the next target is at 56. So PLTR, keep it on your top watch. I will likely be entering it today. Target is more than 2 times over, more than 100% over the current price. If we're looking at shorter time frame target, yeah, there's not too many. I like what we're buying here. What's the other one that I'm going to be? FSR. So the thing with FSR is, I keep saying no FOMO, be patient on it. It just, day after day, if you're looking at this, lower, and then gap up open, sell off, gap up open, sell off, and then another gap up open, and today is another gap up open. So yesterday's gap up open was a run, but did not close near that high of day. Today, I do believe we're going to see bigger bull volume than yesterday. I'm okay buying in at a higher price versus down here. You can never nail the bottom, but the target remains at 35. So even if we were to buy at 25, that is a decent 30% return that we're looking at. So FSR, pretty confident in it. This is the other top watch I'm going to be watching. Let's do, I don't know if you're still interested in EIX yet, DG. Let me know, but let's do your current ones. We got 20 minutes left. Is this a perfect touch? Doesn't look like it. No, so we're actually trading under now. All right, so we had a big on NDX. What is this? NASDAQ? Oh, no wonder. I was going to say, why does it look like an index? NASDAQ 100 index. Okay, so on NASDAQ, we had a huge rising wedge forming, lost the key trend line, so that is a little bit of a red flag. Same as in, I don't know why are we covering this? What targets do you expect for NDX? Oh, targets? Okay, so I'm just gonna use NAS 100 then. Target right now would be expecting the GP lining up with the key zone right around, let's see, where's the key zone? 13,300. 13,300. All right. ARKK is an ETF that's based on, I can't remember what it was. It was tech. TR innovation. I think it's tech. ARKK, I believe, is tech because there's the F, that's financials. G, that's bio. Or is it Q, that's bio? Anyway, so this is going to be the ARKK is going to be very similar to NAS movement. So if you are trading ARKK, just use NAS as your guide. Majority of the move is going to be tech based, so you are going to be seeing similar action to what the NAS is doing. Versus, you know, if you were to watch ARKF, then it'd be a little bit more similar to SPX versus NAS. And then BIIB. Wait, I think Rafaela had a few. Okay, I'm gonna do Rafaela's first because she is part of the trading community. So let's take a look at Apple. Higher open, straight into resistance, a little bit higher than yesterday. So there's a potential that we're gonna be finally breaking over the daily 8. First sign for bulls. I wonder if there's another one, another trend line here. Nope, that broke under as well. Only by 1 day though. So this could be a trend line to keep an eye on. We are trading under the pandemic trend line. So even if we were to bounce, I mean, it'd be ideal to bounce from here because aside from that, I'm looking at the extension down below 113.80. But chart is actually looking okay now. Volume, nothing significant. The thing with Apple is it's going to be a slow mover. I like using it as a longer term portfolio hold because over long term, if you look at monthly, weekly chart, you know, it's hard to lose money on it. The problem with it now is look at the parabolic move that we've had on ever since 2020, meaning, oh, even on the monthly there's a bear divergence too. Never realized that. So from the split, the month that Apple split, there's a huge bear divergence now on the monthly. So this could take a long time to play out. Essentially, we are holding the monthly 8, so that is okay. If you're looking at playing Apple, just consider it as a bounce play versus a portfolio hold now, because it could take a long time to work out. Decreasing bear volume looks decent, but March we're only a third of the way in, and we are already seeing half of February's bear volume. All right, next one, GOEV. I saw you talking about it on your Twitter. GOEV. Nice dip buying on the monthly. We made new lows on GOEV, hey? No, not new lows. But yeah, this is a red flag for me. Unable to hold 10 bucks. Bounce so far, no significant bull volume. Increasing bull volume. We are opening up higher. No clear trend line here. I wouldn't really call this a well working trend line because we didn't see a third touch. But let's see where the bounce is. Okay, so we already made it. Yesterday we saw a rejection from the 0.382, but now we are opening up above it. Let's see if there's a key zone. Gap has already been filled. The only key zone that I can potentially say is basically the gap. Previous support broke down, gap down under, and it became resistance. So this is the most recent one, which would line up with 0.5. Depending on how fast we get there, you could see a wick from here before another leg down. So GOEV is still just a bounce play. What does it look like on the weekly? Nothing. No bull divergences either, so it doesn't justify for further move. Look at it as just as a bounce play. KOSS. Alright, so on KOSS, biggest bull volume day yesterday. We're going to need to see some follow through today. We are opening up lower. But as long as yesterday's low hold at 23.20. Now remember, this is an extremely volatile stock. Same as GME, it is one of the Wall Street bets. So be comfortable, know your risk tolerance. From here, we need to see that follow through today. If bear volume starts showing up, sell off, that is a red flag and likely will be out. From here, this is an ABCD pattern. A being here, B, and then C on the higher low. And we want to see the D. If we do see that follow through today, there is an increased chance at the target of 136. But I don't want to see a delayed move on this particular ticker. Placing stop under yesterday's low, 23.20. All right, BIIB, BIBB, IB. Choppy chart, good for scalping. Not real good for investing, eh? All right, so key support. Decent bear volume coming in. So we are right on that support. We're opening right on that support as well. 260 cannot be lost. If it's lost, you're looking down at 254 to 252 to 254 area. Seems like it likes to do a lot of gaps. Gap down, gap up. Another gap up here. And these are big moves too. I see a long-term potential of a long-term wedge forming. There's no monthly bull flags either. It's just chop. Somewhere around there. So if you want to play this chart, scalping wise, this could be very decent returns as long as you get your entries and exits right. I mean, same with anything else, but this one can provide nice, easy returns. Play it off of this wedge. Enter, or if you're playing bull, enter at the lower trend line, exit and short at the upper trend line until that stops working. But I do see this potentially just going sideways forever. If this is so 1, 2, 3. We've already have 4 touches on the upper trend line, 3 touches, well, multiple touches on the lower trend line. So 2 key trend lines to watch for. Easy plays, up and down. And if it does go all the way based on, if it does work out like how a wedge generally works out, I don't know if this will because it's on a monthly time frame. So it's going to be a sideways action for a long time if it does. Breaking point would be right around 2030. 10 years, almost 10 years down the road. So you can't be playing this ticker for 10 years. There's a chance you can be playing this ticker just up and down for 10 years. All right, next, BA. BA is worth covering. Okay, so BA is part of, although not directly, it is part of the vaccine play. And that's why we're seeing decent bull action recently. This key support, we held. Okay, no, not really a key support. Key zone. We didn't come back to back test the key zone though. So from here, I think we were covering it when the chart was back here. Was anticipating some sort of a pullback, but instead we went sideways action. Held that 0.382. Chart was extremely strong on the sign of hold of 0.382. Next day is a bull volume. That was the sign to enter. BA is part of vaccine play. So from here, we did make, yesterday we did make new 52-week high. Now on the daily, there is, so pre-market, we are opening up higher too. So know this, we are going to be extended on the 4 hours. We are going to be extended on the daily. There is going to be likely a pullback relatively soon. And where the pullback takes, I would, ideally for bulls, what you want to see is around that 0.382, a back test of this trend line. So BA over long term would still be bullish. Vaccine play cannot go wrong. Remember, we're only in March, and the herd, the herd immunity, I believe we're looking at the end of the year. So vaccine plays are going to be long plays. Just to give you another couple examples to look at is Air Canada. Similar idea. We just made new 52-week high, but there's still so much upside to it. Now, original target was 41.47. There is still so much upside. We're currently trading still under 30, 41.47 for AC. It's fairly decent considering the move that it generally has. So yeah, they should be long holds instead of tradings, in my personal opinion. And similar idea, Suncor. Oil and gas, or oil has just been on a complete breakout. 52-week, now it is a 52-week high in the gap territory. Gap fill looking at 24.54. So Suncor is looking great as well. Not too far extended from the daily 8. Potential to run further. We are opening up higher too. I want to find a couple more tickers, making the maximum use of the last 4 or 5 minutes. ABNB. Actually, ABNB. Another vaccine play, and I have my eyes set on this. Really want to keep a core position in. The only problem I have with it is the potential choppiness of the market coming up. Nasdaq is also, this is trading on Nasdaq. So one thing to note in the current environment, guys, is make sure, on the top left here, can you guys see it? Yeah, you can. On the top left here, it shows what index is trading under. Because of the discrepancy between SPX and NAS, make sure to check that on your specific tickers before you trade it. NAS is going to be relatively stronger going forward versus SPX. In my opinion, it should be relatively stronger. But yeah, ABNB, head and shoulders pattern played out. Key zone and GP would bounce from there. No substantial volumes. Keep an eye on it. All right, so I'm going to end it here today. Thank you guys for watching. Don't forget to give a thumbs up. If you're looking to build that pot of gold and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. Also, check out our website and Twitter. Website at totalcontroltraders.com and Twitter is at _TCTraders_. We offer 7-day free trials to our chatting platform where trading ideas are shared and charts are reviewed live. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.